You are listening to chartingwealth.com for Friday the 7th of September 2018. We have plenty of books left for you in the fifth printing, Charting Your Way to Wealth. Now, if you buy that book before the close of business tomorrow, we are sending out, because we know we had people traveling over the holiday. Several of you wrote in fact, several from Europe saying, please, I want to get the short chart trading. Please let me buy the book later. So we are holding that open. Buy the book now. We've got them in stock. We'll ship them right out to you, and we will email you, all the new purchasers, we will email you the short chart training. If you don't have that, you need it. It is wonderful. So many of you have watched it and bragged on it and talked about how it has helped you understand short chart trading so much better. So please, buy the book. We will share that special training with you. And again, the book is all you need to understand what we do here on a daily basis. We go over the Bollinger Bands, all of the different settings for the derivative oscillator, the price percent oscillator, why we use the master indicator as the price percent oscillator, the type of candlesticks we use, Heikin Ashi, and all the other things, particularly our two main methods for entering to and exiting trades. It's all explained in our book. We worked years on this thing, and you guys helped us because we published chapters, and you all gave us feedback, and it was just wonderful. So buy the book. It's the way we support all the work we do here at chartingwealth.com for you every day for free. Let's jump into these charts. We see stocks are down for the day. As we're entering into the fall-winter trading zone, are we going to have things get crazy in October? Remember, every market crash that has ever occurred, not saying it's going to happen, but they all happen in October, and we're already flying into September, entering the fall-winter trading zone. And again, remember, the market tends to move in much stronger directions, one way or the other, not necessarily up, not necessarily down, but they tend to be longer, more easily recognizable moves. And of course, we can see that as far as the S&P 500 all the way back in July. But again, that is not the fall-winter trading zone by far. It's just the way that the markets have been going up. But remember, what goes up must come down. Let's jump into where we are this week. We see a pullback underway, down for the day 0.30%, price percent oscillator going flat, derivative oscillator losing energy for the first time in many, many weeks. Again, we have a red open box candle. It's not a strong red down candle, but it is an open box candle, so we're paying attention to that. We look at the two-day chart. What do we see? Well, it is trying to cross over going down. Now, this current candle will close on Friday. It's just the first day of the latest one. So again, if it crosses over going down, that will, of course, mean our ability to jump into an up trade on the S&P 500 is done. You know, we were waiting to hope that the 4-hour chart might cross back over going up and might have ability to gain a little bit more. This may be the topping out of the market for the season. We don't know, but we're just watching. Anyway, it is for the short term. If indeed this candle closes down, we shall see what happens. We do see the derivative oscillator losing energy, price percent oscillator heading down strongly. What's that 4-hour chart doing? Well, it's been going down since it crossed over going down back on the afternoon of Friday, and it actually started going down before that and has continued to blown through now the two-day trend line heading toward the weekly. Hasn't crossed that yet. We'll keep our eye on things and see just how these charts shape up. What's going on with the Qs? QQQ, NASDAQ 100. Those tech stocks, we got a red spinning top, means indecision tending down. Price percent oscillator like the S&P heading down, actually even more precipitously so. Derivative oscillators also losing energy. What do we see on the two-day chart? We see that that two-day is crossing over much more strongly than the S&P 500. Derivative oscillator still in the positive. Will it flip over by the end of the day on Friday? Don't know. We like to see both the price percent and the derivative oscillator moving over at the same time. Strong down candle forming first day of this latest one. In the 4-hour chart, man, it has been just rocketing down, pushing through at least the wick, pushing through the weekly trend line. So again, strong down movement on the Qs. We'll continue to watch and see when things potentially set up for a down move. Okay, what's going on bonds? Well, bonds were up for the day 0.37%, but that didn't change the weekly candle. Still a strong red down candle. Price percent oscillator heading down. Derivative oscillator going slightly negative. What's going on the 2-day chart? Well, it's full negative on the derivative oscillator now, at least the first day of this latest 2-day candle, even though it's a green up candle. Price percent oscillator heading down. Derivative oscillator heading down. That's all because they're oscillators, and you had a slam down on that prior 2-day candle that ended on Wednesday. So that oscillation is what's still pushing the derivative oscillator and the price percent oscillator down because they're oscillators, even though there was some up movement, 0.37% for the day. And again, keep in mind the weekly's in an up move, the 2 days in a down move. That violates our policy. We don't jump in unless both our medium and long and big charts are going in the same direction. That's the weekly and the 2-day. Then we wait for a pullback on the 4-hour, and when it crosses back over in the same direction, we jump in. Well, we don't have that right now. Got a little schizophrenia going on. 2 days down, weekly's up. 4-hour could be bottoming. It's hit that area now for 2 days, right around the 119.74 mark. Still negative though. Price percent oscillators flat, derivative oscillators heading up. We'll just wait and see how things settle out, because you know what? They always do. We'll just wait. Remember, first rule of trading, don't lose money. Second rule of trading, make money. Okay, what's going on gold? GLD. Is gold bottoming out? Well, it's been around the same spot here, sliding sideways for about 3 weeks. We have a red spinning top right now, which means indecision tending down, sitting right there on the down trend line. We see the price percent oscillators flat, derivative oscillator losing downward momentum. Again, for the record, gold up for the day, 0.19%. 2-day chart. We can see that sideways slide. We can see that so far, it's just the first day of this latest 2-day candle. Bit of an up movement above the weekly and below the 2-day. Now, of course, that 2-day is in a confirmed up move, so we have that same problem. We have the 2-day in one direction and the weekly in another, like we saw with 20-year bonds. Derivative oscillators losing momentum as the price percent oscillator is headed up. Lots of uncertainty there in gold as to where it's going. What's going on the 4-hour chart? Hasn't crossed over going up yet. Looks like it might be trying to. Derivative oscillator losing momentum. So again, just wait and see how gold settles out and when it presents us with a trade. Folks, buy the book, help us out, and we will help you out by sending you that short chart training. Just what you need if you want to know more about how to use the smaller charts. My friends, that's what we got for you today. Remember, at the close of business on Friday, we'll be recording the comprehensive review and forecast. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.